Hey everybody, welcome back. Now to kick off 2022, I wanted to discuss a recent research report by the good folks at Crypto.com, which number one, reviewed the big events of 2021, and number two, predicted what the trends will be for the coming year. Now this includes ongoing and emerging trends such as the Metaverse and the explosion in blockchain gaming, the continued rise of alternative protocols to Ethereum such as Avalanche, Cardano, Polkadot, Solana, and Terra, and innovations that are expected to hit off big, such as Web3 and decentralized autonomous organizations, or DAOs. Now, before we dig in, make sure to like and subscribe and turn on the notification bell so you don't miss any important updates. Without further ado, let's dive on in. Okie dokie, so before jumping into the 2022 predictions, let's briefly review the big events Crypto.com highlighted for 2021. Now first up is good old Elon Musk, who was behind several pivotal moments throughout the year on the Bitcoin charts. Now weeks after he sent Tesla's head of treasury to Michael Saylor's Bitcoin conference in Feb to learn how to add Bitcoin onto Tesla's balance sheets, the company's purchase of $1.5 billion of Bitcoin and its decision to add Bitcoin as a form of payment for its cars sent Bitcoin's price to an all-time high of 65K, adding almost $500 billion to Bitcoin's market cap. Really impressive. But not long after, Tesla did a 360, causing the largest crypto crash since the coronavirus in early 2020, with Bitcoin shedding 55% of its all-time high in a massive liquidation cascade all the way back down to 28K. See my dedicated video on that one. Now, after a couple of months in the wilderness, the markets came roaring back after Elon's bullish crypto chat with Jack Dorsey, ultimately culminating in Bitcoin's new all-time high of 69K in around November. Now, to be fair, Elon's ability to manipulate the market like this reflects more on the idiosyncrasies of the crypto space more than anything. You got to remember that we are an emerging asset class, a nascent and small $2 to $3 trillion market, trading assets that are difficult to value and whose prices are mostly driven by speculation. And it doesn't help that the current market cycle bull run right here is driven by excessive leverage, with way too many retail traders borrowing way too much money at the wrong times to buy even more crypto, which is having the effect of distorting the markets and making dumps worse than they have to be, thanks to the cascading effects of mass liquidation events. Alright, next up we had the explosion of non-fungible tokens, or NFTs. Now non-fungible means unique, right? So the natural use case for NFTs is to represent unique digital assets, whether that be a piece of art, an in-game item, or some other digital collectible. Now in 2021, the DeFi scene first exploded on Ethereum, where NFTs came in the form of ERC-721 tokens that you can purchase on NFT marketplaces such as OpenSea. For your information, the opposite of non-fungible tokens are fungible tokens, which on Ethereum are your standard ERC-20 tokens, many of which you can buy on centralized exchanges like Binance and decentralized exchanges such as Uniswap. Anyway, in the second half of 2021, the NFT scene began exploding on smaller, cheaper, and faster blockchains, like Solana. Now, some of you may remember Solana's liftoff into space back in August was, funnily enough, not due to DeFi or some big contract with Wall Street, but in fact, it was due to the Degenerate Apes NFT launch on Solana, which sold 10,000 ape NFTs in under 8 minutes, each of which required 6 SOL tokens to mint. Check out my dedicated Solana video for a deep dive on Solana's technology, DeFi scene, and price predictions. I'll link that above. Next up, Memecoins. Now, what started off as Elon Musk endlessly shilling Dogecoin on Twitter, skyrocketing its prices all the way to 75 cents, an astounding $90 billion market cap, ended up in hundreds of new meme coins flooding the markets for the rest of the year. Now, love them or hate them, these meme coins do serve as a conduit for naive new capital entering the crypto space, which actually ended up introducing a pretty considerable number of new users to cryptocurrencies. Not a bad thing. Check out my dedicated Shiba Inu video where I dish out the good, the bad, and the ugly, which I'll link above and below. And also check out my meme coin speculation video where I do the math on whether or not meme coin speculating is worth the risk. Alright, next up is blockchain interoperability. Now, 2021 saw the explosion of new blockchains eager to take a slice of Ethereum's market share pie. Now, it's now clear that crypto isn't a zero-sum game, that there's enough room in this nascent space for many blockchains to thrive, that there probably won't be one blockchain to rule them all. This means we need infrastructure to connect these blockchains, and right now we don't have something like, say, the TCP/IP protocol that standardized communications between computers in the early days of the internet. But we have projects like Polkadot and Cosmos alongside an army of bridge projects that are cracking away at this interoperability problem in the ambitious effort to help blockchains all speak the same language and move assets between them seamlessly. Next up was El Salvador's adoption of Bitcoin as legal tender, so that Salvadorans could now conduct business and do their shopping with Bitcoin, although whether you'd want to is another question. Now, some reasons why an entire country like El Salvador would adopt Bitcoin. Number one, the majority of Salvadorans don't have a bank account, right? Awesome. Crypto and blockchain is a decentralized peer-to-peer network that does away with the need for centralized banks. Number two, a considerable number of Salvadorans send and receive money from abroad. Great. Bitcoin and its Lightning Network enables quick and cheap payments across borders, which again, don't require banks. Number three, El Salvador wants to attract tech innovation and investment, which makes sense given the pivotal role blockchain will play over a range of disruptive innovation technologies over the next 20 to 30 years, such as Web3 and the Metaverse. More on these two soon. Now, more generally, what we're seeing are some developing countries showing interest in adopting Bitcoin as a way to fight inflation or to try and break free from the shackles of a financial system dominated by the power of the US dollar as the global currency reserve, while at the same time we're seeing developed countries devise clear legal and tax frameworks for cryptocurrencies, with economic juggernauts like China and India outright trying to ban crypto, or at least introduce their own version of it, one that they can control. Look, ultimately the deal is this. Governments and central banks, they want to foster blockchain innovation that can be used to improve the existing financial infrastructure, but they don't want to lose the economic lever to control monetary policy, aka the infinite money glitch. This means crypto is currently sitting in a bit of an uncertain regulatory environment, where us crypto enthusiasts like you and I, we don't quite know what's ahead as governments wave about trying to decide how to regulate us without killing us. Take the recent Bitcoin futures ETF launch, which was in some ways a bit of a deal with the devil. You see, Gary Gensler and the SEC in essence permitted crypto assets to become mainstream in the stock market in exchange for the ability to regulate them, since ETFs belong in the $50 trillion US stock market that falls within the SEC's jurisdiction, whereas crypto does not. Next up, major upgrades for the two largest blockchains, Bitcoin and Ethereum. Now, for Ethereum, we got the London hard fork in August, which implemented 5 Ethereum improvement protocols, one of them called 1559 that completely revamped Ethereum's monetary policy. Now, let's be upfront. Ethereum changes its monetary policy as often as the central bank does, but what made EIP 1559 quite special was that it introduced a regular burning mechanism for the very first time. To help make gas fees more predictable and prevent front running, every transaction fee was now broken up into a base fee that was immediately burnt, along with an optional tip if the user wanted their transaction prioritized. The bottom line is, after the London hard fork, a little bit of ether is burnt with every transaction now, removed from the circulating supply forever. Now this means that in theory, once the total transaction volume ramps up above a certain level, which is expected to come after the Ethereum 2.0 launch, Ether will for the very first time in history become a deflationary cryptocurrency. And that's not even something Bitcoin can claim, since Bitcoin is technically still inflationary, just that the inflation rate is approaching zero. Check out my dedicated video on EIP 1559, which I'll link above and below. Meanwhile, the Bitcoin Taproot upgrade that came in November was the biggest network change for Bitcoin since the Civil War 4 years ago that resulted in the hard fork that created the Bitcoin spin-off Bitcoin Cash. No such dramas this time round, however, as everyone was on board Taproot's goal to bundle together transactions from multiple signatures that'll help the Bitcoin blockchain become speedier, cheaper, and more private. Next up, we have the ongoing evolution of decentralized finance towards what some are calling DeFi 2.0. Now you see, DeFi has only been around for about 2 years, right? With its original core innovation being the invention of liquidity pools that are populated by their users, people like you and I. Now this led to the rise of decentralized exchanges like Uniswap and PancakeSwap that removed the need for centralized middlemen to mediate transactions, and this enabled the self-custody of our own crypto assets using Web3 wallets such as MetaMask. We also got decentralized lending platforms such as Aave, Curve, and Compound, where we could take out loans against our crypto collateral without the need for, again, centralized banks, or thanks to smart contracts. Now, after 2 years of experiencing both the pros and cons of the current iteration of DeFi, we're seeing a bunch of new so-called DeFi 2 protocols spinning up that aims to improve upon the original liquidity pool formula, among other things. For example, if we look at OlympusDAO, they turned the traditional liquidity pool model upside down and came up with a new system that's based on game theory that ultimately resulted in, number one, OlympusDAO owning its own liquidity, right, which help OlympusDAO sustain some of the insane APYs they return to stakers. Number 2, OlympusDAO not having to pay out huge returns to incentivize users to provide liquidity, a current problem we do have in DeFi at the moment. And number 3, OlympusDAO being able to guarantee liquidity and reduce the risk of unexpected sell-side pressure, right, again, a current issue in DeFi. Alright, another example of a DeFi 2.0 protocol making waves is the lending platform Abracadabra, which innovates on how capital and deposits are used. You see, right now, lending platforms like Aave and Compound, they require loans to be over-collateralized, since there's no human middleman to verify that those taking out loans can actually pay them back. So there's plenty of opportunity for innovation there. Keep your eyes peeled for a dedicated DeFi 2.0 video where I'll go through the details of some of these projects. Finally, in 2021, we had the explosion of interest in Metaverse projects, kicked off by Facebook's rebranding to Meta platforms. Now, the move towards the Metaverse experiences is actually a global technology trend with a multi-trillion-dollar addressable market that's certainly not going anywhere, right? This is not a fad, guys. In 10 to 20 years' time, imagine being able to join a virtual work meeting with a suite of tools that will allow you to be more productive than in real-world meetings. Imagine owning digital paintings as NFTs that you can project onto your real wall. Imagine using your digital avatar, made for you by crypto companies like Metahero, which I'll link above, I've got a video on that, to try out new clothes online before clicking the buy button. Imagine watching a sports match from any angle of your choice. Imagine socializing with loved ones and friends in novel ways despite being halfway across the world. I talk about all of this in my How to Invest in the Metaverse video. I'd urge you to check it out, it is an eye-opener. Alright, now onto the 2022 predictions. First one relates to mass adoption, specifically the projection that we're going to have 1 billion crypto users by the end of this year, which is almost 15% of the global population. Pretty impressive. Now there's something insightful about this specific projection, 1 billion. You see, the number of crypto users tripled over 2021, from about 100 million users to 300 million users worldwide. That's a 3x in adoption. What that means is that 1 billion users by the end of 2022, well, that's the projection, means that we'll again see the number of users triple. 2021, 100 million to 300 million, that's a 3x. 2022, 300 million to roughly 1 billion, that's approximately another 3x. Now, this kind of logistic or S-curve growth pattern is exactly what we tend to see with the adoption of disruptive technologies. So here's an idealized version of the S-curve, right? So we have this initial early phase where the number of users are growing exponentially. This is where we are at the moment with crypto, right? With the number of global users roughly tripling every year. And then in another 2 to 5 years, we're going to be in the mass adoption phase as crypto becomes truly mainstream. And eventually we'll end up with what's called saturation, where the technology becomes part of everyday life for most people, right? Something that we might see in 10 to 20 years as things like crypto integration into traditional finance, the metaverse, Web 3.0, that becomes widely used and intertwined with the daily lives of people around the world. And so here we have some real examples of the S-curve in action. We've got the internet, personal computers, TV, electricity, air travel. Now, what's also quite interesting is if you look deeper into the data, the adoption curve for crypto you'll find is among the fastest in history. So what I mean is if you compare the exponential growth phase of the S-curve for crypto compared to the other disruptive technologies in history, crypto adoption is spreading remarkably fast. By the way, if you're keen to learn more about the S-curve, which turns out to be a real Swiss Army knife model used across mathematical modeling for a variety of different situations, I've published a bunch of articles on my blog looking at how scientists use it to model things like population growth and diseases like COVID-19. Feel free to check them out, the link's down below. Finally, in terms of geography, we note that crypto adoption is on the rise in all the main continents across both the developing and developed worlds. Right now, India, the USA, and Russia boast the most number of crypto users, right? We've got 100 million users in India alone. But as a percentage of the population, we have Ukraine, Russia, and Venezuela boasting the highest adoption rates, all of them with more than 10% of their population being crypto users. All right, moving on to the second 2022 prediction, which relates to the traditional financial world opening its doors wider and wider to crypto. Now, this includes being able to buy more and more crypto assets in the traditional markets. Now, I'm referring to the global $150 trillion stock market opening its big golden shiny doors to our tiny but mighty $2 to $3 trillion crypto market. In other words, a market that's more than 50 times bigger than the crypto space opening its doors to crypto. That's a pretty bullish development. Imagine starting up your own homemade lemonade company and Walmart suddenly decides to open its doors and shelf space for your product. That'd be awesome, hey. Now, in 2021, we saw the SEC finally approving the listing of Bitcoin futures ETFs on the New York Stock Exchange and the NASDAQ. And look, this was pretty big news, but what everyone's really waiting for in 2022 is the SEC to allow Bitcoin spot ETFs to be traded on the stock market, right? Now, that's a development likely large enough to finally blast Bitcoin above $100,000, because fundamental news of this caliber represents a key milestone for mass adoption. It'll mean that traditional investors, mum and dad investors, large institutions, hedge funds, pension funds with masses of capital at their disposal will finally be able to gain exposure to real cryptocurrency in the well-regulated US stock market, a $50 trillion market that offers the kind of guardrails and protections that these investors want to see. For these folks, buying crypto assets in an SEC-regulated market provides more confidence and a lower barrier of entry compared to having to traverse into the wild west of the real crypto market. Alright, moving on a bit. Besides integration into traditional markets, there's also crypto integration into the traditional banking sector. The banks don't really want to do it, but hey, even if the CEO hates us, you gotta bite your tongue if your customers demand it. Otherwise, your competitors will leave you behind. Alright, next up we have the explosion of GameFi that's going to continue to fuel crypto adoption. Now, what's GameFi? Well, it means gaming and DeFi, which is basically just a fancy way of saying blockchain games. Now, gaming is already a huge $400 billion industry, with over 2.7 billion people on Earth counting themselves as gamers. And more broadly, gaming intersects with the global tech push towards the Metaverse, right, which is a huge $8 trillion addressable market that over the next 20 to 30 years is expected to revolutionize the way we communicate. Now, as I discussed in my How to Invest in the Metaverse video, which I'll link again down below, blockchain games and crypto are going to play a huge role in the journey towards the Metaverse. Why? Well, number one, gaming already has such a huge addressable market. Number two, the path to the metaverse will naturally be through games, interesting enough, because gaming platforms are already well developed, in contrast to the myriad of other things that need to be built from scratch to make the metaverse dream come true. That's going to be a ton of R&D over the next couple of decades. And number three, metaverse assets are digital assets that exist in virtual worlds, which means that cryptocurrencies and NFTs sit right at home in the metaverse. I mean, we're talking about purely digital assets that exist on the blockchain. Now, I have a range of articles and videos on the metaverse, including deep dives on specific gems, how to get into metaverse startups, and so on. Feel free to check them out. I'll link them above and below. Alright, fourth prediction for 2022, which is scaling up blockchain infrastructure to meet the exponential rise in users. Now, right now, we're in a bit of a sticky situation where the blockchain with the largest network effect, that's Ethereum, is also the least performant. People are sick of having their transactions front run or waiting minutes for a transaction that costs $50 to be confirmed. And this has resulted in an army of faster, cheaper, more nimble blockchains rising up to try and eat a slice of that delicious Ethereum market slice pie. But these protocols like Terra, the Binance Smart Chain, Avalanche, Solana, Phantom, layer 2s like Polygon, they don't yet have anywhere near the number of dApps or the network effect of Ethereum. So in 22, we're going to see continued progress to fix this imbalance. We're going to see these up-and-comer chains grow their ecosystems further and their user base. And hey, maybe Kadena will come and join the party as well. Now, at the same time, the slow blockchains, notably Ethereum, the devs are working hard to improve its scalability issues through a multi-pronged effort. Now, this includes major multi-year upgrades like ETH 2.0, currently scheduled for release at the middle of 2022, although that may be delayed. We'll have to keep our eyes out for that. It also includes specific scaling technologies and solutions, including sidechains and rollups. And then we have ambitious projects like Polygon that's trying to unite all of these scaling solutions into a single framework. I'll talk more about Polygon in a separate video. Overall, crypto projects are becoming increasingly chain agnostic on where they launch their offering, helping to end Ethereum's dominance. For example, Solana is becoming a popular destination for NFT and gaming startups. The Binance Smart Chain is still a favorite for Memecoin startups. DeFi and lending is exploding on Terra and Avalanche. So cross-chain protocols are going to become the norm, and along with that is going to come the increasing importance of blockchain interoperability, right? The need to be able to connect all of these assets across different blockchains together in a standardized way that's also quite easy to use. And that's where bridges and blockchain-to-blockchain projects such as Polkadot and Cosmos are coming in and making great progress. Finally, the last prediction relates to the rise of Web 3.0 and decentralized autonomous organizations known as DAOs, both leveraging blockchain technology to transform the internet and governance respectively. Now, just a quick primer on the evolution of the internet. Web 1.0, that was the foundation. And importantly, it was open and decentralized and people could build on it without the need for centralized third parties. Web 2.0, that was a revolution in the front end of the internet, that is the user-facing side. Now, this ultimately enabled big tech companies to consolidate enormous amounts of power and wealth through things like social media platforms. And this came at the cost of the innovators, the creators, and the users that use these platforms. Hey, I've worked hard to bring you guys quality, no hype crypto content, but if YouTube suddenly wanted to zap my channel right now, there's probably squat that I can do about it. Turns out today, the best entrepreneurs have learned not to rely and therefore not to build on platforms owned by the big centralized tech companies. Instead, they're flocking to crypto by the droves to build out the third generation of the internet, Web 3.0, which is powered by blockchain technology, and this time represents a revolution not in the front end, but in the unseen back end of the internet. Importantly, Web 3 takes the internet back to its decentralized roots. That is, a web of open protocols and apps owned by the builders and the users. You see, when I create on Ethereum, God forbid the gas fees, Avalanche or Solana, I can own a part of the network by owning ETH, AVAX or SOL tokens. Can't really say the same for Ethereum's equivalent in big tech, aka Amazon Web Services. Now, it's not all roses and rainbows. Now, just to give you an alternative point of view, Jack Dorsey recently kicked up a kerfuffle on Twitter, warning that venture capitalists might end up pulling the strings behind Web3 startups. And that's because, you see, unlike Bitcoin's immaculate conception, where Satoshi came in, kickstarted the network, and then pretty much vanished, the top crypto startups these days, well, I'm talking about all the big altcoins, they get off the ground with VC backing. And this kind of embedded incentives end up driving the project's development because people expect a return on their investment. That's the argument. In other words, it's going to be difficult to create a decentralized utopia that started in a very centralized way. I'll dive further on this argument in a separate video. Now, moving on to DAOs, which is essentially an organizing principle that allows people to come together, make decisions in a fair democratic way without the need for a central authority such as a CEO. How? Well, to keep everyone honest, the traditional corporate governance structure is replaced by smart contracts, and everyone's interactions are recorded on the blockchain. And as it turns out, running a company with code became somewhat of a revolution in governance that solved a variety of different challenges and problems. DAOs are one of these inventions from crypto that's not going to be uninvented. Right now we're seeing an explosion of innovation around DAO design, with DAO use cases spilling from the crypto into the outside world. In fact, we've seen people organizing to DAOs to try and buy an NBA basketball team, to restore ocean health, try and increase the wealth of women. We even saw a DAO that wanted to buy a copy of the US Constitution. So the list of DAOs to emerge in 2022 and beyond, it's going to be far more exhaustive than what I just mentioned. All right, let's leave it there. We've covered so much. I think it's going to be a really big year ahead. Let me know what you think in the comments down below. Please drop me a like to help me grow this channel. Hit that subscribe button and notification bell to stay up to date. Wishing you all a very happy new year and looking forward to seeing you in the next one.